Greetings, folks. This is DC Investing. I've reached financial independence and I'm talking about topics that may help others on their path to financial independence. And today, the topic I wanted to talk about is on inherited IRAs or 401ks. And when this happens is if one of your parents passes away, or I guess an aunt or uncle or somebody else could pass and then leave you a retirement account. And may we all be so blessed. But I was sad when they pass away. But receiving assets can be a great help to you. But there's some rules about how inherited IRAs come to you, and rules on removing funds and the taxation for those. And so, basically, when you inherit an IRA, that money, let's say it was your parents. I'm just going to talk about it as if it was your parents that you're inheriting an IRA from. They didn't use all the funds that they had saved over the course of their life. And so upon their death, those funds pass to you. And, if you have multiple siblings in your family, you'd split that IRA into multiple parts. But let's say you get something like $200,000 in an IRA. Now, I know more people may have larger amounts given to them. And, if you get $1 million bequeathed to you, well, kudos to you, but there's some tax ramifications you have to think about. But let's say you have a $200,000 IRA. You have to take the money out of the IRA that you inherited within a time frame of 10 years. So you can choose to leave it in and withdraw it all at the last time, or just kind of let it grow, or take smaller portions year after year. But basically, you get a 10-year time frame that you have to pull those funds out. Now, the important part to remember is that all of those funds that you're withdrawing add into your ordinary tax rate structure. So if you are in the 22% tax bracket, whatever you remove from that IRA adds in, and you have to pay 22% tax on that amount. If you're in a higher tax bracket, say like over 30%, well, then you have to pay 30% of that IRA in that given year. So that can be a headwind to you that is unfortunate, but it's the reality of getting an inherited IRA. So, if you are in those higher tax brackets, just be careful on how you structure your withdrawals, because any withdrawal from an IRA adds to your overall taxes. So if you have like a $200,000 IRA, you can take $20,000 a year, and that over the course of 10 years ends up to your $200,000. Of course, whatever's in your IRA may still keep growing, so you might have to take a little bit more out of it, but that might empty that account over 10 years. And then each year you'll add $20,000 to your gross income that then will be taxed. Now, you may want to try something strategic along with that. You could take a sabbatical from your job. And if you had say $100,000 salary, you could decide, well, this year I'm going to take a break from work or make a shift in something, and then pull $100,000 out of that IRA all in 1 year. You still pay taxes on it at the structure, but if you're married, the first $30,000 comes out at 0% tax rate. Then the next amount is at 10% at tax rate. The next amount is at 12% tax rate. And if you're in that $100,000 bracket and not married, then chances are you won't get into the 22% bracket. But that's just something good to know. But if you inherited, say, $1 million, that's a lot harder to get rid of over the course of 10 years. You have to pull out at least $100,000 a year over that time frame, and all of that adds to your taxes. Now, you might say, well, why don't I just take one lump sum? Well, if you pull out $1 million and add it on top of your normal tax that you normally pay, it's going to push you into the 37% tax bracket, which is the highest tax bracket that's out there. So you're going to be able to keep less of that funding. I mean, you can take it all in the year and then just not worry about it. But, by pulling it out over the course of 10 years, $100,000 every year, you're going to keep more of it because you're going to be in a lower tax bracket. So really kind of consider your options carefully. I guess you could talk to a financial advisor or a tax professional to give you some information on what you can do. In this case, it's probably wise I'm not a tax professional, but these are just some things that you might run into as you get older on your path to financial independence. And if you're retiring early, just know that, if a parent passes away, not only it's a sad thing, but it can also, financially cause some intricacies that you have to kind of deal with. So, if you are expecting to get lower healthcare subsidies for the ACA account, you've managed your finances well. You've got low health insurance costs because of you maybe using a cash account or um, have return on capital or something. If you get an inheritance, well, all of a sudden you have to think about adding those funds into your overall withdrawal strategy, and that can make your healthcare more expensive. It could give you higher IRMA costs, bump you into higher tax brackets. So just know that that could be aware, or that could happen at any time. So you're aware of that over the course of, say, the next 30 years of your life. You can kind of plan, hey, what happens when my parents pass away? What does that do to my tax situation, my healthcare situation? It's still a blessing to have funds come to you, but it's gonna mean more tax. So there's some things to consider. Something else you can do as a strategy is bump up your retirement savings during that time. So let's say for that 10-year time frame, let's say you have an extra $20,000 that's coming in that would push you into a higher tax bracket. Well, you could ramp up your retirement savings during that time. And in typical 401k plans, the amount you can put into those plans is 23,500. If you're below age 50, if you're above age 50, you can put $30,000 into those pre-tax retirement plans. So that saves you from having to pay tax on those funds. So, if you're getting $20,000 a year out of an IRA or 30,000, you can just save more into your 401k, and then the net effect is it doesn't impact you in the year that you pull that out. You can also push money into an IRA for your spouse. Well, first I'll say, if your spouse works, they also get those same limits. So the spouse can save $23,500 if under age 50, or $30,000 if over age 50. So the two of you together, if you're over age 50 when you inherit this, could push $60,000 a year into a retirement account, and that gives you flexibility on how you pull those funds out of the retirement account, and potentially maybe you're in lower tax brackets when you pull those out. Um, the I was mentioning that you can do an IRA for your spouse, and a 401k for yourself. So, like, let's say you max out your 401k at either the 23,500 amount or the 30,000 amount. You can't do a IRA pre-tax for yourself. You can do a Roth, which I would recommend doing. You can do the 7,000 into your personal Roth, but you can do a $7,000 amount to your spouse's IRA, which is a good option because that further reduces your taxes. So know that that's a possibility. Even if your spouse does not have earned income, that means they don't have a job. You're not getting taxed on any income that comes in. Because you are working, you can still put money in a spouse's IRA, $7,000 a year, and then save that tax. So those are some things that you could do during that time that you have to pull money out of a parent's retirement account that you inherited. Just ramp up your own retirement savings, and then it gives you less of a tax hit. So overall, that's kind of a few strategies. Just know that if you inherit funds that are in an IRA, you have to pull those out over the course of 10 years. It comes out as ordinary income. That can affect your taxes, so know that it could occur. There's other ways you can inherit funds too, and I'll talk about those in another video. Some of them are preferred for tax advantage things. I guess I'll just say, Roth accounts, if you inherit a Roth, you still have to withdraw the funds over 10 years, but you don't have to pay tax on it. So that's preferred. And there's some other things, but again, I'll talk about those in another video. Thanks for being part of this channel or watching the video. Like, subscribe, and I guess maybe make a comment. Have any of you run into issues? Did you inherit an IRA? Did it cause any tax issues? Anything you could share with this channel or the group can help everyone as we all kind of learn together. So thanks a bunch. We'll see you. Bye.